Good afternoon, welcome to MEED Live and welcome to a special broadcast today. We're going to look at the UAE and GCC construction industries and particularly we're going to look at the new realities in the regional construction industry that have been created by the fall in oil prices and the general change in the economic landscape in the region. I'm joined today by four very eminent panellists. We have with us Bill Bodie, the Middle East and Africa Executive Vice President for Parsons. Welcome, Bill. Next to Bill, we have Mohammad Khader al-Shouli. He is the Senior Vice President and Head of Contracting Finance for Mashreq. Welcome, Mohammad.
Thank you very much.
In the middle, we have Rami Ghandour, the Managing Director of Metito. Welcome, Rami.
Thank you.
And on my immediate right, we have Wael Farsakh, who is the General Manager for Dutco, Balfour, Beatty, based here in Dubai. Welcome.
Hi. Thank you.
Thank you. So, over the past 3 years, we've seen the fall in oil prices that have fallen from over $100 a barrel for the previous 3 years down to around $50 a barrel over the past couple of years. That has fundamentally changed the economics of the region. In response to that, the governments across the region have embarked on restructuring programs and fiscal consolidation programs, which have had the net result of cuts in capital spending and cuts in the major projects market. It's also put pressure on liquidity in the region, affecting bank deposits, affecting credit growth, and affecting cash flow. Nobody has been more affected than the construction industry by this. For many years, the construction industry has grown on strong capital investment to develop infrastructure and diversify the regional economies. And then suddenly we have seen a slowdown in projects and impact on cash flow. If we can just go to our first slide of the day, one of the major areas we have seen affecting the construction industry is on payments by clients. MEED, together with Mashreq, conducted a survey of contractors in the UAE, and the slide in front of you now shows that client payments, which are traditionally difficult in the region, have continued to stay problematic for contractors over the past year. If we look at the second slide, we can see that 60% of respondents to our survey said that contract payments take longer than specified in the contract. Moving on to the next slide in our survey, how long, if a payment is late, how late is it? Between 6 and 12 months, the majority of respondents have said in our survey. And then finally, most important, do we expect the situation to improve next year? 82% of contractors surveyed by MEED and Mashreq have said they expect this problem to continue, late payments. So we are seeing this combination of no new projects, delayed payments, and a squeeze on cash flow generally. That's just part of the story, and we're going to go into the detail of the wider picture now with our panellist. Bill, if I can start with you. So sure. Parsons, you cover Middle East and Africa. Parsons, a big American project management consultant, and you can see the picture regionally and globally. So how has construction changed in the past 2 or 3 years in this region?
Well, of course, you pointed out, Richard, that many of the governments in this region are having budgetary pressures because they are disproportionately dependent upon hydrocarbon-based revenues. Those revenues then are used to fund the large public infrastructure projects. After 2-3 years of depressed pricing, we're now seeing the results of that in terms of projects being delayed or canceled, projects being slowed down, contract terms being perhaps even more onerous than in the past. And of course, as your survey pointed out, we're seeing increasing difficulties with compliance with contractual payment terms.
Now, in this region, there's a sort of reputation, probably well earned, for late payments and some of these, some of the dispute problems. Why is it different now? What's changed?
Well, if you look at it holistically, in the past, companies always had to deal with difficult complications, a lot of bureaucracy in getting paid. but at the same time there was tremendous growth. There were lots of very, very large infrastructure projects, and customers also made contract decisions based on quality, based on technological discriminators, and not just on the lowest price. Since the last few years, contract decisions, awards have been made under much more stringent circumstances, and that has changed the overall sort of risk profile for companies doing business in the region.
Okay, so a good keynote there from Bill. If you want to get involved in this conversation, use the screen in front of you. You can submit questions or make points that will appear on my screen here, and we can put it to the panel to discuss. So please, I invite you to get involved. Wael, if I can come to you from a main contracting point of view, how has construction changed? So we've heard from Bill some of the pressures on government cutbacks. Yeah. How does it look from the contractor's point of view?
It's definitely difficult because it's more stringent. I mean, projects are coming. We involve in tenders. A lot of times the tender is not meeting the budget. It's a re-tender and e-tender, which additional cost. The project moves on. Sometimes even while the project is moving, there's delays in the continuation of the project, de-scoping, looking at it, variation, introducing a lot of changes, which the management of that change cause further complication on the payment. Every interim payment almost as a final account with substantiation. That delay in payment automatically aggravate the cash flow of the contractor. It's more affecting our subcontractor and our supply chain because they're on the receiving end from the main contractor. Pain is transferred as gain is transferred. As a result, we're seeing more in the supply chain. There is companies who cannot cope with the current economical situation due to their size and their capability to sustain a negative cash flow. And as a result, it put more pressure on the main contractor.
So the primary impact of the primary change is this squeeze on cash flow. So it starts with at the top of the pyramid, the clients delay payments or make changes or something, and that filters down.
Correct.
And what does that mean in terms of the impact on the UAE or the GCC construction industry? Are we going to lose talent? Are we going to be not able to deliver projects?
So if it continues, it could come. Since there's no boundaries in this market, there's always new people who are willing to come and start and supply and other different supply chains in it. Is it going to reach to the point where you're not going to deliver projects? I don't believe so. I believe you'll find out more of the main contractor will change and start doing vertical commitment, where we start picking up certain works which the subcontractor used to do and start doing it in-house instead of outsourcing it to control the quality, to control the continuity of it, so it doesn't affect your work. I mean,
but doesn't that still require the cash? I mean, if the main contractor is going to pick up the sub-packages.
It does. I mean, indirectly, we end up in a number of projects financing the project until, as I said, it's how do we manage the change, how do we can control it and get paid while the change is happening. That's important because a lot of the client, because the way the contract is structured also, they prefer to address all the changes at the end of the project, which means you're financing at least the change during the project until you reach an agreement, and then you can get paid and pass on such payment.
And Bill touched on the issue of lowest price wins. You know, in a boom time. I mean, my perception is that cheapest has always been best in this market, but maybe from what you said, during the boom times, some clients have been willing to look at quality or technology, or maybe not just go for the lowest price. But are we seeing more cutthroat contracting competition?
Look, the prices right now are definitely cutthroat. There is certain prices we see in the market puzzle you. Honestly, certain result. I mean, there's obviously a pressure on all the contractor, and you're caught in a vicious circle. How do you restructure the organization to cope with the existing market? Do you give away part of what you normally take, I mean, as a part of your margin, or do you readdress your risk, given the situation of the company and the workload? And in every organization, they have to address these questions. You know, as the market, there's plenty of work. It's not all proceeding. There is while there is suppliers and there is contractors who are willing to put price, we're finding that the supply chain is not responding to the main contractor, which is making some of the main contractor stepping back and reviewing. You've got to be very selective. Who are your client? Who do you work with? Which paymaster do you want to work with? And how do you deal with it?
Okay, so we can come back to that in quite a lot more detail. Rami, if I can move on to you. So Metito is a specialist in, well, you can probably describe Metito better than me, but a specialist in desalination technology. You're a technology company, but you also do BOT projects, and you're based in Dubai, but you work in 20 markets or more around the world. Does it look the same for a company that does BOT? Are you seeing the same crunch that the main contractors in traditional construction are seeing?
Yes, we are. We're seeing a crunch, and definitely in the region we're seeing a slowdown of some sort in certain type of projects. We are looking at people being more interested in alternative financed projects so that they can take on board something which is going to be more sustainable long term.
What does alternative finance mean?
Such as a BOT or a PPP, something where the end user or the client is paying over time. Could be as simple as an EPCF, but more typically when you want to look at the whole life cycle cost of the project, and therefore you look at a BOT or a concession and you go through the long-term project.
If I can just ask, which the clients that are moving for this model, it would be utilities mostly? Or?
Utilities, but also private sector, semi-private sector. So could be something as simple as a real estate developer, for example. Okay. So a real estate development would need the water infrastructure, the wastewater infrastructure, as well as many other services outside of what we do. And so our belief is that if we can structure something in a way where interests are aligned, where we look at the whole life cycle cost of the project and optimize that. So whether it should be more CapEx, less OpEx, or vice versa, is a study that we should do in each case-by-case basis to see what is the optimum long-term, most cost-effective tariff. The problem we have is that people who are new to the BOT game come with an EPC mentality and still look at the short-term EPC side of it without taking into account the full long-term aspects of it. So one of the points is that you need an educated client to be able to understand what it is and what our good friends the banks require as well, because obviously a key part of a long-term project is how to structure the financing so that it is a bankable project and works for everybody.
So when you're talking about a long-term project, you mean 25, 30 years, something like that, where
yes.
you have different phases, the construction phase and the operational phase.
Correct.
And you can adjust your financing or your borrowing to suit the different risk profiles.
Correct.
Okay, so that brings us on to the financing. Mohammad, welcome. Thank you for your patience whilst we've touched on these issues. What does the construction industry look like from a lender's point of view? I mean, contractors come to you, to Mashreq and other banks and ask, for financing to fund projects. Is it too risky to lend to them?
Thank you very much. Well, the construction market has changed tremendously in the past 5-6 years, and after the first crisis in 2008. Now, can we say that it is becoming risky to finance contractors? It's becoming risky to do construction right now under the terms and conditions that are prevailing. The ability to manage the change is what is really required to bring about that stability. As far as financing contractors, of course we would be there, and of course we would like to continue, and we would want to continue to finance the contractors. The reality is that there has to be more transparency. We need
transparency from whom? From the paymaster, the client, or from the borrower, the contractor?
The whole industry needs to be very transparent, meaning that when you're coming up with a project, the vision needs to be there, articulated clearly to the contractor. The resources for it from a funding point of view is either arranged or are willing to be arranged with different terms and conditions. As far as the bank will be considering a contractor, It's the ability of that contractor to perform and the ability of that paymaster to pay. If you establish those and then there is a working relationship between two parties, the banks would be happy to be in between, in the middle, facilitating.
So when a bank is assessing a contractor to lend, to provide finance for a project, you're looking primarily at the paymaster, are you? Who is the owner of the project? Where does the cash flow start?
First you look at the contractor to start with. And a contractor, their technical capability to perform and projects that they are bidding for, this is what you first look at, their track record, their ability to manage change or be able to weather the difficult situations that they are in. If they are equipped for that, then and you'll assume that they will be bidding and they will be taking contracts that are within their scope of expertise. Then you look at the paymasters who are ultimately are going to pay them. A lot of the paymaster vetting comes through the contractor, where whenever they are willing to enter into a contract and you have established that this is a contractor that understands exactly their industry, that does a lot of the work for you. Now, you need to look at...
And would you say, sorry to interrupt there, but I guess what I'm trying to drive at here is how healthy, from a financing point of view, does the construction industry look at the moment? We've heard the challenges from Wael and from Bill and from Rami about the sort of the crunch at the moment with cash flow, and Rami touched on different contracting models. But would you say these issues are now at a critical point? We need to have change in the UAE construction industry, otherwise confidence will disappear.
Of course, if you look at the contracts that are already in place and the delays that happen to payments, there are, and I'm surrounded here with the people who are actually in the middle of this. Two parts to the delay in payment. It's either you certify late, so the contractor continues to work and not get certified. And then once you certified, you may under-certify what has already been done. And then once it's certified, it takes you time to pay. Now, all of those add on to the delay, the cycle, the deficit that the contractor goes through. While the contractor continues to perform and delivers the project according to the milestones, that deficit increases. Now, naturally, the role of the bank is to step in and plug into these deficits. And banks will be doing this. As far as Mashreq is concerned, we will definitely continue to support these projects that we are in with the contractor from the beginning. However, what makes it difficult today is that the clarity on whether this contract, contractually the contractor has the rights with the paymaster. Let's say if you have increase in scope, it needs to be documented. If there is an extension of time, you see some contracts today that the contractors are working well. The original or the actual date of delivery or completion has already passed. And without that clarity on, yes, we are intending to do that extension. Yes, it is going forward. Yes, we commit to you that we will complete this project with you after.
So from the primary concern for you as the lender is then, just as you said at the beginning, it's transparency, it's documentation that says this is what's going on and this is who is responsible, and,
of course.
And that is missing today.
Yes.
If I can come, Bill, to the consultant, because presumably the consultants have a role in all of this. Particularly on this point about the process. Where do consultants fit into this this picture, and do you agree with the points that have been made so far?
I certainly do. I think that in a perfect world, a consultant is brought on by a client and is empowered to ensure that project is delivered, either through the delivery of a design, the administration of a tendering process, or in the supervision of construction and warranties and NOCs and that kind of thing. The problem that we have experienced in this particular region is that A lot of times the clients wish the consultant to have all of the accountability for the performance of the project and for the delivery of that project, but not the concomitant authority to actually drive production. Some clients are pretty enlightened about that, particularly in the private sector. There's some developers who basically say, I'm going to set out a series of KPIs, of performance indicators for you. You deliver and you'll get paid. But I'm not going to tell you what to do on a day-to-day basis. Other clients, they want you to stick to the original delivery and price, but they also want to say, no, change this. Use this particular consultant. Do this differently. Stop working while we do something else. And all of that has a cumulative effect, and you're not able to actually exercise your expertise.
So one of the grievances or comments I've heard from contractors is about delays in certification of work, which then leads on to delays in payment. And the consultant has a role there, the consultant who's employed by the client. Is that, I mean, I don't know if a project manager is in the same boat or if we're talking about engineering consultants specifically, but is there a conflict there if you have milestones and KPIs to get a project delivered on time on budget, but at the same time the client wants to delay payments and so will encourage their consultant to not certify?
Yeah, no, I think the clients that we've dealt with here want to see an honest administration of certifications and non-objection certificates and that kind of thing. But where the problem comes in is in the demands to change things and change players on an intermittent basis that prevents the holistic delivery of a project. I don't think NOCs are necessarily the problem. Change management is a huge problem in terms of delivery and payments, because every large project is going to have change. The problem is, how do you
when you say change management, do you mean variations within a contract, the scope of a project?
Yes.
Is this something that you see? I presume it is.
It is. That's what I said when we mentioned the change management. A variation the job is either increase or de-scope due to various reasons. A change, you want to follow the latest technology, you want to introduce a new product within the project, but the mechanism under the contract exists, but then no one would want to apply that mechanism under contract. Everybody want to wait till the project is completed and then, in retrospect, assess the impact of that change. Now,
so you'll have a big pile of variation orders at the end of a project, and then you have to argue about each one.
No, the variation themselves, if it's a small variation in the product itself, it's easy. Is when a major change introduced.
Okay.
I mean, you put a certain section on hold until you redesign it, for example, and then you issue it again. It's that time and the time to do the re-engineering associated with that change. That's where for better word, the conflict start to happen, and that's where the under certification becomes. It's, as Mohammad said, I mean, there is certain project which runs where the contractor is continuing because he needs to deliver the project, yet the contractual completion dates have elapsed, and we are, for better word, at time at large, and then you're incurring cost, and that have not been certified. If you're dealing with a good client, with good engineers on board project management, it will be assessed in the end, and you will be paid something for that cost, once it's settled, but then you're getting the payment most likely after the project is completed. If you're fortunate enough and you select your client correctly, you will be paying some interim payment against these changes as you progress.
And with the way the market is at the moment, with the squeeze on liquidity in the region, are we seeing clients changing the scope of projects because of financial issues? Or
some clients are changing the project itself or the specified end product to meet the recent market demand. I mean, the market shifts. People, for example, if you have a building, people were going for 3 apartments, you might get an instruction in the middle of the way. No, change from 3-bedroom, go to 2-bedroom or a studio even, and let's change the whole building because that's what the market need is. So, okay, while you're doing all that engineering, you're still going up with the frame and casting the concrete, and there is a certain activity had to stop. You need to go back to re-engineering. Okay, how is that picked up? And then you get into all the problematic claim situation whereby you need to fight or amicably settle, but then you don't recover all your costs associated with it.
Okay, and so that adds to the liquidity crunch.
To the liquidity, because
if I can take on your point here. So one of the things, Rami, that I've heard discussed over the years is, you can, by getting the contractor involved earlier in the design process, you can design out or at least have a more buildable project and reduce the late changes. So as a BOT company, presumably you see the benefits of that, bringing design and build together. Is that the way forward?
I strongly believe so, because at the end of the day, you look at what Bill was mentioning in terms of what are the KPIs at the end of the day. What is it that you actually want to achieve? Because really, the client doesn't particularly care about what's in there. He cares about the end product. How is he going to utilize that facility, whatever it may be? So trying to give that responsibility to somebody who's specialized in doing that from an overall holistic point of view is generally a much more efficient way to do it.
Okay, and so you've talked already this morning or this afternoon about PPP, or you've just talked about design and build. So you feel that forms of contract should be an area where construction clients or contractors should be looking at improving the industry. Is that something you agree with?
Look, this alternative project delivery has proved itself to be successful in major infrastructure projects around the world.
Alternative project delivery, that means design and build, does it?
Could be design build, it could be a design build finance, it could be a full-fledged public-private partnership in which there's a consortium and there's different layers. It's sort of a catch-all phrase, but it's a way of doing business in which the customer's immediate cash flow challenges can be ameliorated in return for a longer-term return on the part of a financer or a finance consortium. The issue with that is, number one, the customer has to understand that alternative project delivery does not mean free money or that there's no bills to be paid. It means that the payments will be structured a little bit differently. The other thing a client needs to understand is that the control over the day-to-day implementation of a project has to be a little bit different, and the allocation of the risks associated with the delivery of a project have to be a little different. The client can no longer have 100% control over every single decision made on a daily basis, yet still hold the consortium responsible for the delivery of that project.
How do you change that? I mean, how do you get the client to say, yes, I'll take on some of this risk?
Yeah, well, I think the clients have started to look at. I mean, we've engaged with a number of clients and on a couple of projects where there is the early contractor engagement, where we actually got paid for being with the design, with the consultant. The problem is it comes with its own catch. You cannot have 5-6 contractors in an early engagement. So you will have at best 2 contractors engaged in the early engagement to keep some competition to ensure that the client is getting his competitive price at the end of the day. Unfortunately, with this experience we're going through, and you can see the market is starting to change, they didn't fail because the end budget was not a price, was above the norms the client expecting in a very competitive market. So the client said, fine, we give it a try, we like it, stop, let's go to the traditional way, let's float a tender. I personally think during the next 2 years it's going to be very interesting because the clients will try. We've seen a lot of the clients are trying to bring finance with the contractor and try even, please bring the finance and give us an offer with the finance and offer in the tradition.
So what we hear a lot about contractors self-financing or bringing finance. What does that mean? Does that mean working with the banks to borrow more, or does it mean export credit support?
It's mean both. You can either borrow locally from the banks and put an offer with the banks locally, or bring export credit and bring it to the region and try to develop the project accordingly. It's still touch and go. There is a couple of projects which have been done with Expo Finance successfully in the region, not by us, but by colleagues and competitors, contractors. There is others where the client have gone, and then when they calculated the cost of the finance, they found out they can borrow money less expensive than the contractor can do, and they went back to the traditional.
So that brings in the banks again, of course. So if contractors are being asked to take on the financing, what's the bank view on that? I mean, presumably, as you have just said, the client can borrow at a lower rate normally.
Correct.
So is that a good model?
For the contractor to bring in the financing, we need to understand who is going to be the borrower on record. A lot of the paymasters expect that the contractor becomes the borrower on record and brings in the money, takes that risk with the banks, and then fund the project. What we have been talking about with a lot of our customers who came about with the idea is that we would be happy to look at providing a finance to a project, provided that the structure of the project, the assets that belong to that project are all ring-fenced, all the rights are available to it. You have recourse outside the contractor. Other than that, if you only keep it on the contractor, of course the price will be high, the cost will be high, because the banks will start add on or price that risk in a completely different level. Hence, when they looked at the cost, they found out that it's easier to borrow directly rather than go through the contractor.
Only reason is that for asking the contractor to borrow is because it creates capital immediately rather than the overall costs.
I would disagree with that. Because, if I may, and I think that's the problem, is that you typically, a client who's not educated in the concept, doesn't have experience of what a private sector financed project will be or a contractor financed project will be, will think, oh, it's a way to get it cheaper, I don't have to put the money up front, and that's the reason to do it. That's not the reason to do it, because as rightly been pointed out by Mohammad, the contractor is not necessarily going to get cheaper financing than the client, because at the end of the day, it's the credit rating of the client is going to drive the cost of the financing of that particular project. So what you need to, the decision is based on allocation of risk and certainty, because when you have somebody effectively with experience managing that project, looking at the overall 25 years or however long the life cycle of that project is, they can optimize, they can guarantee the delivery. The chance of a variation order, for example, is much less, because you set everything up front, you clarify it, that's it. This is what we are delivering at the end of the day. Versus, so it's not that it's cheaper, it's that it's more certainty. It is probably, it is likely to be cheaper in the long run, because you won't have the variation orders, and you'll optimize your operating cost up front. But if the issue is, if somebody says, give me an EPC offer, give me a BOT offer for the same thing, and then they take the EPC offer and they go to their bank and they say, how much will you lend me money at? That typically is going to be cheaper. The problem is further down the line, that's going to be more expensive if it's not managed properly.
Pay me now or pay me later, right? If you look at the overall life cycle costs, that's a different calculation than if you're just looking at, let me see what a design will cost, what this construction will cost, what this warranty will cost, and then I'll worry about the operations and the maintenance later.
You need a very enlightened client, presumably, to think about a 30-year...
It is.
Exactly.
It is. I mean, where I am said, if the client is educated, but I mean, it's a learning process. We see it. It's a learning process for the whole industry, whether you're the client, the contractor. I mean, the same thing with design and build. We have 2 successful projects where we did design and build. The client, perfect. He knew exactly what they want. The design brief was very clear, and we went in, and the project finished actually ahead of time.
Yes.
Everybody was happy. With the same client, we tried to do it on another project with another team from the client. It didn't go.
Right.
It's a learning process which the industry have to develop, and we got to remember, in the GCC, the construction industry is pushing hard. It's a continuous construction, and the pace of it is higher than any place else I know from my experience, and there will be learning, and there will be, unfortunately, casualty during such learning process, and pain.
Okay, we have about 25 minutes remaining on the broadcast. If you want to get involved, please send in your questions using the screen in front of you. There's a text field, or even if you just want to make an observation to add to the conversation. Mohammad, I have got a question for you from Mashreq. I will read this out unfiltered, so we have touched on, I think, some of these themes, but how is Mashreq dealing with client credit risk, brackets construction companies, so this construction company credit risk during this time, this period that we're talking about? Has access to liquidity been more limited for contractors and construction companies when they are dealing with customers who are defaulting on payments? So how are you I guess you've touched on it already a little bit.
Mashreq with the contractors and financing them through the difficult times, we've been through a lot of cycles, specifically with contractors since 1991. And what we understood and what we learned from the past is that if you want to finance a contractor, you need to think like a contractor and adjust your terms within the bank that suits the contractor. Our understanding is very basic, and sorry for all of you to simplify it. For us as a contractor, we'll go in, there is a project, they will build it and they will go out. What happens in between, okay, is what we need to understand it with the contractor and then plug in that financing. Simply, for us, contractors continue to be a desired risk that we would like to take. We have been very active, and it's one of our, very good years nowadays. Doing business with.
It's a good year for banks, is it? Everyone else is struggling.
When doing business with the contractors, and for us, it has been historically the lowest risk, the lowest number of losses or defaults across this whole industry was.
Well, that doesn't make sense. If
it doesn't, right?
Why is that? Do you think?
It's basically choosing the right contractor, doing the financing that is specific to the needs of the project, rather than going to
it's
general.
Your risk profiling within your institution that is changed, not the industry.
And the structuring of those limits. Now, if you enter a project, the moment you sign with a contractor that you're going to support that project, you're going to issue those guarantees. Mentally, Mashreq is decided from day one from that point that we are in this project till the end. And we will have to work with all the changes that will happen to that project with our customer, with our contractor. So the choice of the contractor, the choice of the project are critical to actually running a very smooth financing. So to cut things short, we are keen on supporting the contractors at this time and the times to come.
And more generally, what is the position of the banking sector? I mean, are the banks liquid at the moment? Is there plenty of capital available to borrow, or are you having to provision for the increased risk in the market, which means liquidity is squeezed?
See, liquidity is available in the market. There's no doubt about it. If you can look at the numbers that are coming from the regulators and the public entities. However, where to deploy this money, that's where the choice of risk is very important. So you need to choose where you're going to put that money to. It's not the lack of liquidity at all. As you could see, even the delay in payments, it's not really because of a lack of liquidity. It is because of the change management.
In the public sector, the customers here are not going to be defaulting. No. Eventually, these issues get resolved, and payment occurs. It's very rare, unlike in a private developer, like as we saw in the last crisis. Several of them defaulted on some loans. A public sector ministry here is not going to default. Of course, down the supply chain, there could be pressures on particular players, smaller players, and they may have to go into bankruptcy or something else. A bigger issue for larger companies, however, is when you're looking at your long-term investment plans and where your strategy is and which parts of the world you're going to.
So I was going to ask you, Bill. Yeah. So Parsons is a huge, American-based consultant. You operate all over the world, and you will have people looking over your shoulder from head office outside of the region. How does the region look at the moment? The UAE and the Gulf, the GCC has been such a hot market for so many years. and suddenly we have this slowdown and the pressures on cash flow and revenue opportunities. How does it look for an international?
All international companies look at three things: where your revenue is headed, what your margins are, and what your working capital situation is. All three don't have to be in perfect alignment, but if all three are somehow out of whack, then you have to actually do some soul searching and identify whether this is really a market you want to stay in.
Are we out of whack at the moment?
I think so. I mean,
Okay.
look, the project awards, as you guys very effectively articulate and quantify, have been down. Of course, we've talked about the lowest price contract awards. That pinches people's margins. And of course, the payment issues and the contractual issues affect working capital. So you put all of that together, it's hard to create a narrative to say this is an area where we really want to be. Now, the answer I give right now is that we're in a particular cycle. It's kind of like a perfect storm. But we also see some positive signs in terms of the adoption of new technologies, in terms of the embracing of economic diversification, in terms of the financing of public investment funds and sovereign wealth funds to actually get involved in the transformation of these economies. And we think those could lead to a new approach towards infrastructure development.
Okay, so let's come on to the transformation in just a couple of moments. I want to come back to you, Wael. So this. You mentioned earlier about new players coming into the market.
Yeah.
If people are struggling and leave, there's always going to be new players. And let's say, hypothetically, that some of the traditional companies, maybe American or West European, decide that they can focus on North America. Are we going to see lots of Chinese and Asian contractors coming in? I mean, how do you see the competitive landscape changing?
Well, they are. I mean, there is a number of Chinese companies who came in the first boom and they weathered the recession and they're still active in it. We've seen...
And are they going to push prices down, do you think?
They have pushed prices down. There is Turkish companies who have came to the region in a big way, even in the recession, because there were recessions in the construction industry in other part of the world, and that pushed a lot of contractor to come to the territory in the GCC. There still is, relatively to the world, there's still a fair bit of supply in the region, which is attracting foreign contracting company to come to the region.
And are you seeing this as well in your sector, a changing profile of the type of players?
Our sector, I'm speaking about the water and wastewater sector, has always been a very international sector. So if we look at the players in it, there are players from the region, there are players from Europe, say potentially less than you would have expected from the US, but certainly players from Asia, from China, from Korea, from Japan, each fulfilling their separate roles. So we're used to a very internationally competitive marketplace there.
Right, we have 15 minutes to go and we have a number of questions, so I'm going to go through these in no particular order. If you do have questions, please get them in now, or observations, because time will run out very quickly now. So I think this is for Mashreq. When financing a project, does the bank ever differentiate between the use of industry standard construction forms, such as FIDIC, or bespoke contract forms? So do you look at the form of contract?
We definitely look at the type of contract that our customer or the contractor is signing. We would always like to see that our customers are really negotiating contracts where risks are fairly distributed, the contracts are clearly articulated, and then the rules are defined properly. The choice of the contractor means that these are the ones who actually do this diligence before they get into the market. So, yes, do we choose one over the other? No, but the FEDIC is a contract that is there. It doesn't mean that it applies to all contracts. However, even if a bespoke, if it's actually balanced and the contractor is capable to adhere to the terms and entering into this contract willingly, knowing that they can manage it, that we look at it definitely positively from the contractor's point of view.
Okay, we have a second question here. So this person, I think, is from a consultant's firm. I have witnessed a recent surge of UK SMEs on the claims and commercial management consultants market. So I guess it's what we would call QSs, I think we might be talking about, attempting to enter the current UAE GCC construction market. Are they losing out to more established companies? And if so, is there a silver lining? Okay, so I think this is specific to, perhaps this is, Parsons is probably closest to this one.
Okay.
So on the cost consultancy side, the QS side, are we seeing any changing patterns in the type of companies? Are the big players dominating still?
Well, there still are your sort of international standards. I mean, if I think like all of the other layers of the industry that we've discussed today, there are pricing pressures even on the surveyors and QA and QC folks and the checkers on the checkers on the checkers. It's part of this overall down cycle. The risk associated with that is similar to the risk associated with always going with the lowest price contractor. Over time, you may end up, as we've discussed, paying more because of the quality issues, because of the shoddy workmanship, or because of the inadequate understanding of all of the elements. You can answer a question about today's quantities very accurately, but if you don't have the understanding of the entire dimension of a project, you may be setting up your customer for a rude awakening down the pike. So yeah, there's been an adulteration. There's been a lot of new players. My expectation, having been through several cycles, is that eventually the customer community comes around to a greater appreciation of quality in their supplier base, and there's kind of a correction to the mean.
So you touched on cycles. That's a good time to go on to outlook.
Yeah.
So let's try and look forward for the next couple of years. I'll start with you, Wael, on what's your view? So it's a tough time for contractors at the moment.
Yeah.
We've talked about the various areas for change, transparency, contract forms, and we'll maybe come on to technology in just a second. How does it look for the next 2 years? Do you think oil prices are coming up and everything's going to be rosy again?
I don't know about the oil prices. Otherwise, I won't be sitting here. I'm not an oil expert. I mean, all I can say for the contractors, we're being very selective with our client base. We've been very open, and we've been engaging our contractor, our clients, expressing our pain. We've been trying in positive dialogue to change the term of engagement, to try to have a more fair, for a better word, contract. We've been in a certain project identifying with the client, and I have to appreciate the fact they're accepting it, to identify a risk pot where we manage it jointly so we can kill some of the issues which cause such a pain.
And so the sort of clients who would consider this sort of conversation, these would be repeat clients?
Repeat clients,
big
absolutely.
Government agencies?
Or semi-government agency, which are we working with, and those are the clients.
And so these would be partnering contracts or BOT or?
No. It's a standard contract. However, during the tender process, we're identifying this risk and we're highlighting it, and we're asking openly to share the risk. I mean, certain government clients insist on a rigid, non-conditional contract. We're submitting a complying bid, an alternative, where we identify the risk and identify the gain for them if they're willing to share the risk and manage it.
Gain share, gain share.
Yeah, absolutely. I mean, you cannot afford to continue on the current prices to win a job which will cause you a pain.
And how do you feel as a traditional construction contractor about PPP? There's a lot of talk about PPP across the region. And in my experience, contractors are usually quite cynical about that because they don't believe governments in this region want to go down that route. But now we're in a landscape where everyone's talking about it. Is that going to take hold?
We did try it on a couple of contracts. We went the whole 9 yards, but it didn't happen at the end of the day.
Was this recently or during times when it was less squeezed liquidity-wise?
It was less squeezed liquidity-wise. I mean, at the end of the day, the PPP, if I can be blunt about it, it's in other countries where you have change of government and you pass the payment to the next government. In here, we have a good stability. They have a continuous probably from their model and the way they look at it, they can finance it easier. They know what they want. They also subsidizing a lot for the PPP of to work. You need to have revenue. There is a lot of the project where in the infrastructure it's difficult to bring the revenue back direct. The model, so it's the guaranteed payment for the project, and that's where it's become complicated.
Okay, so for you, the outlook in just briefly is traditional construction models, but more communication,
more early engagement, more of a better understanding what the risk, identifying it, because at the end of the day, it's for the benefit of everyone if we can identify the risk and eliminate them in the early stage.
Okay, and Rami, moving on to you, so the outlook for new forms of contract, we've just heard from Wael on his views on PPP, but you might have a different take.
Sure.
And are you looking outside the region more than you are inside, or what's your outlook?
We've always looked outside the region, and definitely in the short term we have a lot of new markets that are growing more rapidly than the growth is here.
Where are the hot markets outside of the region? Just briefly?
Sub-Saharan Africa, for example, is an area that we are leading in quite a lot. We've had a very long historic presence across North Africa, and over the last couple of years we've got a big push south.
And who are the paymasters in these markets? Is it development banks or private sector?
No, typically it is the government agency
Government
itself.
direct.
So again, what you have to look at, and talking about the point that Wael made in terms of the sustainability of the project and what is the source of revenue of that paymaster. And the issue is, what this does, it weeds out projects which are white elephants at the end of the day and are not sustainable. And so you have a lot of projects out there when the first thing you do in a PP is say, okay, what is the economics of our client? Where are they getting their revenue from to enable them to pay us? And quite often, you ask that question and you see things don't add up. You say, well, thank you very much, but please sort that out before you even start on a project.
Much information can you get? So, banks, when I've spoken with Mashreq, say before, some of the advice is understand your paymaster. Where's the money coming from? How transparent is that process?
Actually, the banks are the most helpful in that, because we often use our good friends, the banks, as the excuse to say the bank needs to know how are you going to sustain this. What are the economics of how this is going to work?
Okay. I'll come to you last, Mohammad, if you don't mind, because I want to stick with the industry people first. We have a question, Bill. I'm going to ask you the same question about Outlook, but slightly different take. We're seeing technology disrupt almost all other industries, so we're going through this digital transformation in utilities or transport. How is technology going to disrupt construction in the next decade or so, and can it help improve margins for contractors and I guess project delivery? What's the technological disruption we can look forward to?
We're sitting here today in Dubai, right, which has issued a declaration about it becoming the smartest city in the world by 2020, and they're very, very serious about it. And I think they're serious because they really recognize that there is a confluence of not just new digital technologies, but ways of integrating those technologies that have a potential to completely upend a lot of existing paradigms. And I think if you look at the construction industry and you take a look at the applications of high-definition sensors, of unmanned aerial vehicles, of autonomous fill-in-the-blanks, about those kind of vehicles, and about the application of analytics and big data. We all know about building information modeling, of BIM. We all know about 3D printing, and we've seen some applications of those. But think about tying all of that together with blockchain technologies, which are really coming down the pike now.
So blockchain is the financing of transferring payments.
Yes, well, that's the initial and the sort of common understanding of it. But it's really about a distributed set of nodes for transactions, and those could be financial transactions. They could be contractual transactions. You could see a day where blockchain, properly implemented, could take care of many of these payment issues we're talking about, because it is about taking the human problem out of a transaction and having it.
Can you see? You mentioned BIM, so building information modeling. If you have a in the clouds virtual project where your drawings are and the contractor does the as-built version once the job's done. Can that be linked to the payment software as well, the financial software? So it's all on, even the payments are online?
Of course, that's the disruption, that's the kind of disruption we're talking about. We're also talking about disruption that
requires a lot more transparency, presumably.
It certainly does. It's one of the themes that we've been talking about today. And it also means that as a customer, you have to have an exchange of yielding that day-to-day control over every minute element of a project with the successful delivery of the project.
And Wael mentioned at the beginning about subcontractor, the supply chain risk. If you have everything transparent on a shared platform, presumably the subcontractors
can tap into it and they can have the same degree of transparency. And then it takes a lot of the pain from them. They know exactly when they're getting their payment, they know exactly why they're not getting their payment, and they can do something about it.
It's very exciting, actually, and it's one of the reasons why companies like Parsons feel that we want to stay in this region, even though we have the issues that we've discussed about today, because of that longer-term commitment.
And Rami, you were nodding. Well, you were all nodding during that brief session. But are you seeing that shift, that digital transformation already in your industry?
Yes, we are. Historically, the water sector has been a very slow sector to react to change. It's been one which has been struggling with tradition, and people don't typically want to innovate in our sector. We are seeing that change. From our side, we have a technology group that is actively investing into new technologies that are disrupting, and so we're very excited about the future from that point of view.
So you're putting investments into digital?
So digital, decentralized systems, pushing everything out, smaller scale, where you can have quicker transactions at the end of the day.
Okay. Just one question that's come in just now. Any of you can step in here. So it's about Saudi Arabia. I know that hasn't been the focus of today, but yesterday we had the announcement of a $500 billion project in Saudi Arabia, a huge mega economic city development called the NEOM project, which is up in the north, connecting into Jordan. How will that affect the UAE construction market? If Vision 2030 in Saudi Arabia does pick up and the public investment fund starts driving ahead with the various projects it has, what will that do here?
Well, I think,
if anything,
I think the Saudi transformation vision is very much supported by the UAE and the leadership here. And in fact, I think if you take a look at a lot of the diversification plans that have been announced by the UAE, you see a lot of similarities in where the Crown Prince wants to go in Saudi Arabia. But of course, it's a much larger economy, it's a much larger population, and I think it certainly has the potential to really jumpstart a major new boom in this region.
I was partly thinking about the stretch on the supply chain, actually.
I think any good news in the region is a good news for everybody in the region. I mean, it does give you sustainability. It gives you to curve or to average yourself and your resources during the ups and downs in the economy. So the supply chain, if I'm in the supply chain and there is a decent project in Saudi Arabia, obviously they will invest more, they can resource more, and they can start planning their future better.
More certainty.
Yeah.
Okay, Mohammad, I'm going to come to you last. We're coming to the end of the show. So what is your outlook as someone who is exposed to the construction industry? You lend to contractors, you're very aware of the challenges we face today. What's going to come next?
Just to start on the bank itself, with the theme of change and the technology, we believe that digitalization and advancement technology will impact our banking industry tremendously. As His Excellency Abdulaziz Al-Ghudair stated,
so he is the Chief Executive of
He's our
Mashreq.
Chief Executive Officer. He stated that 5 years from now, banking will not be the one that we know today. So we have to transform with the industry. What we want to do, and we would like to empower and support transformation and into the construction industry, and learn with it, change with it, adapt to it, and that is the goal that Mashreq is pushing for.
Can I just ask? So if we've been talking about the cash flow problem due to late payments or new projects not coming forward, the banks can go as digital as possible, but if the clients are not signing off payments, how does that change anything?
Back to the basic part. Will that project be completed and will it be paid? These are the questions. If the answer is yes, then you can work the model between the contractor and everybody that is supported to that contractor on that project. What we would like to do and work with our customers is that to create that platform whereby all the payments and the risks that are taken by the contractor and to the subcontractors and suppliers, we can host that and facilitate for it. Meaning, if you are financing the contractor on this project, you might as well finance a lot of the other elements that are into this project, provided that we have a clear set of payments that are flowing through. You capture the cash flow, you can facilitate for everyone on the back of the contractor, bringing in that project and bringing in those subcontractors and suppliers.
Excellent. Well, thank you very much. That brings us to the end of today's show. It's a very short 1 hour discussion on a very large topic, but hopefully we've touched on the issues that are of interest to you. Thank you for joining us today, and thank you to the four of you for such excellent contributions. Thank you.
Thank you.
And we look forward to seeing you next time on MEED Live. Thank you very much.